All right, we are live here. This is Jeff with the HODL review, only here on the chain. Today we are going to go over the concept of banking on crypto, banking with crypto, banking on the crypto exchanges. Is this something that's legit? Is this something that's safe? I don't know, but we're going to find it out right about now and right here. Let's get started. Bam, there we go, and we're back. So today we're going to go over a bunch of different things. So what we want to review, we want to go through the concept here of banking with crypto. Now, one of the things that I've talked about a lot on this channel, on this show here with the HODL review, especially as we go through and we analyze the banks, we analyze the exchanges, trying to get a good, clear understanding of whether or not there is some sort of an overlap. Is there a blending of the banking and the crypto concept here, with the exchanges? Now, one area that we want to pay attention to when we get into all of this is whether or not it's legitimate, whether or not this is the right time, and really there's going to be a lot that goes into that part of it. So that's what we want to dig into. Definitely make sure, since we are live streaming this, for those that are watching on the review, they're watching on the playback, go ahead and leave some comments below. Any of the comments that you leave, we'll get back to. Leave some questions, comments, concerns, whatever it is, feedback. If you're on the live stream, go ahead and throw in some questions and comments right now, and we'll talk about that as well as we go through this. So we're going to go through and dissect a little bit of the. We want to dissect a little bit of the exchanges. We want to look at one of the features that many of these exchanges are offering right now. One of the features they're offering is lending and borrowing, meaning, if you want to borrow against your digital asset, you can borrow against your digital asset. If you want to stake your digital asset, there's different ways of staking. There's different ways of lending your digital asset and really putting it in almost like a savings account kind of environment. So what we want to look at, though, and what we have to really question ourselves on, is whether or not in this market, in this period of time, are the exchanges a safe and legitimate place to actually keep your digital asset? Is it as safe and secure as banks have been for generations? So, and obviously, even within the banking space, as we know, in other countries, as has happened even in the United States years ago, the exchanges can definitely, be, yeah, there's some, suspect events that have occurred within banking, and we've seen things even in our recent history with places like Cyprus, where they shut your banking down. You know what? You don't have access to your money. Then there's a run on the banks. But that being said, when we look at the exchanges, how safe and reliable are these exchanges for keeping our money on? And do they have a form of insurance for any money that's kept there in case something does happen to the exchange? Are they backed up? What is going to happen, and what is your recourse in case something does happen on the exchange? And these are a lot of questions that I think are valid, that we really need to identify, that we have to ask ourselves, and that we have to look at when you do your own research, especially for those of you that are brand new to this space. If you're brand new to the digital asset space, you're just getting comfortable with the digital asset space, and you say, you know what, where should I go? How do I invest? How do I buy cryptocurrency? Then what do I do with it? Do I sit on it There's so much promotion going on the different exchanges to where you can gain interest off of it. And then there's those on those same exchanges, not all of them, but some of them are offering borrowing against your assets. So we need to look at that as well. So those are all the things we're going to cover. Before we do that, let me just take a look at the chat. I've got that over here on the phone. So let's see what we got. Carl Lewis, you look weird. What do I look like? A British gangster. Nice. More like the British gangster than before. Thank you, Carl Lewis. Thank you very much. Going for a different look. How do you like that? Sorry, you don't look weird. It's just weird. Oh, yeah, that's it. See? Different look, different appearance. This is the apocalypse, the post-apocalyptic appearance, or the apocalyptic appearance. That's why we're going with the brick wall, and we got the I guess it's over here on this side, but we've got the last remaining lemon tree in the apocalyptic world. So so that's the concept here. Most importantly, though, is the shaved head. So as long as you get the shaved head, then everything else is good. So any questions that you guys have as we're going through this, go ahead and ping them in, and we'll try to get to them as we go. But let's roll into this, and we're going to go in. Oh, we got too much going on over there. So let's go through this. I pulled up, and we're going to go through Uphold. We're going to look at Binance. We're going to look at BiTrue. We're going to look at Coinbase. We're going to look at Celsius. We're going to look at Nexo. And then I also pulled up Kraken. And we want to look at Kraken because these are some of the primary exchanges that were seen in the U.S. market. So there are a lot of other exchanges out there that I don't necessarily have access to, that I'm not monitoring, I'm not using, and so that definitely will play a part in all of this. And what I'm also realizing now, if Chip is out there listening, is that I forgot to change and remove and go off of Restream. So that's my fault. However, I did get my notification today when I streamed, and that's something that's a little bit crazy. Is that every time we've been streaming, I don't know, for the past like 3 weeks, I don't get my notifications on my phone, on my platform. Now we're getting some notification. I don't know what changed, but anyhow, something changed. But let me just give some shout outs to people that have bounced in here. I see some new faces, which is good. I definitely want you guys to ask some questions. Maybe it's your first time, commenting here. But Frank is asking about Abra. Is it worth having an asset like XRP when it is a synthetic asset and not an asset you hold? And you're talking about Abra. So we'll get into that as well, because actually, and that's a great point. That's definitely a great point, Frank, is that you bring up, a platform like Abra, a platform like Robinhood, those types of platforms, you actually don't have direct access to your digital asset keys. You actually don't own those digital assets. You own them in a different mechanism. So you basically have, like on a Robinhood, you basically have the right to that digital asset that's being held by the Robinhood platform, but it's not something that you actually can move off of their platform. So it's so you have to really be a little bit more cognizant, I guess, of how each individual platform is managing your digital asset from that perspective. So again, if it is like a Robinhood or potentially an Abra, I haven't really used Abra. We can get into that one as well. But if we focus in on like a Robinhood, where you have that digital asset really in name only, And so if you sell it, you have to sell it on the Robinhood platform. You can't move it. You don't have the key to it. And that's pretty much the start and the end of it. So all right, let's get into looking at a few of these platforms here, and I think this is going to be important as we go through them. We want to go through each individual one. We want to kind of dissect them a little bit, and then we'll move on to the next year. So let me go through here. So interesting though, I've seen a lot of comments and concerns. Diesel Hound, Nexo wrongly liquidated my BTC and XRP. Would love to hear more about that. My question on that one, Diesel Hound, you can let us know if this is the case, if they did liquidate it. Did you put that into a borrowing scenario? Were you borrowing against your digital asset? Because we definitely want to talk about this. And this is definitely a cautionary tale for everybody out there if you are utilizing one of these platforms for borrowing. We have to talk about that. And so Diesel Hound, you definitely has valid concern. We want to dissect that a little bit more in depth. And we'll get into that in a little bit. Elizabeth here says, I have a Nano Ledger and Trezor. I cannot transfer them. I need help. Happy to pay for anyone who can advise and help get my crypto onto a cold wallet. So the question there that Elizabeth has, and maybe we can talk a little bit at the end, we'll go into that, is that she's trying to move, it sounds like you're trying to move digital asset to the wallet and not off of it. And so that's a great question. Let's see here. Okay, perfect. So you guys are definitely commenting on that. I want to say what's up to Ferdy as well for bouncing in all the way from the other side of the world from where I am anyways. But anyhow, I know a lot of you guys come in from different parts of the world. We got Carl Lewis here. One Rough Rican, good to see you here again. Diesel Hound, glad to see you here. Jerry Hall, our very own Jerry Hall, actually has a show called One on One with Jerry Hall. Great interviews. He's here with us as well today. And then we've got Rob Will. So then a bunch of others here. We've got Frank, who I mentioned. We've got Chip, who co-hosts the on the chain platform with me. And then we had Peter Voss that bounced in here early on. So, all right, that's enough of the shout outs. Leave some comments and questions as you guys are going, and we're going to address some of the things that we already brought up. Okay, let's start by going into Uphold. Let's go through each one of them, look at them from a perspective of, buying and selling digital asset. So if we're buying and selling digital asset, it's pretty straightforward. You buy, you can sell. So for that perspective, Uphold, Binance, we'll talk about this in a little bit. I left this up here. I think it's a critical point of what they're saying here. Many have utilized BiTrue. We're going to talk about that a little bit, especially when we get into loans and staking. Coinbase as a buying and selling platform. Then you have your borrowing platforms like Celsius and Nexo, and then you also have Kraken, another buying and selling platform. So we're going to look at one, we have 5 buying and selling platforms, and then we have 2 platforms that really are focused in on earning interest and lending and borrowing. So that's going to be critical. Now, here's the interesting point that I want to make on all of this. And I talk a lot about this blending of the banking space. So we have regular banking blending in with the digital asset space. Where is that blurred line? When does a digital asset exchange potentially become like a bank? And in essence, if you're leaving your digital asset on these exchanges, it kind of acts like a bank. It kind of is a bank. And now they're going to that next level where they're actually offering these features that are just like banking. And really, all of them are doing it. Every single one of them are they're taking this initiative. So now when we look at this initiative that they're taking, we have to look and say, is it too soon? Is it too soon that they're taking this initiative? Are we still in this kind of unstable, speculative marketplace where if we leave our digital asset on these exchanges, are we kind of, are we putting too much power in their hands with those digital assets in case something happens? Now, here's what we have to look at also. Debit cards, and we're going to see there's a common trend now that they're launching debit cards, which will allow you to spend the balance of your virtual currency, of your digital currency, with a virtual card. I'm saying you're reading virtual. You can earn. So look at this on Uphold, 3 to 10% returns on your digital asset holdings. Is it cost effective? Uphold is a fairly decent exchange. 0% trading commissions, 0% fees on credit and debit card deposits, and 0% bank and crypto withdrawal fees. I mean, this is really important from a perspective that it's not going to cost you as much as some of the other exchanges to move your digital asset around. And overall, Uphold has been, a very stable platform, and they've done a great job. They've also established some amazing partnerships. One of the other initiatives that they've started over the past months is anything to anything. So that means you can transfer and transact anything over and turn it into anything. If you want Dash to XRP, if you want Bitcoin to XRP, XRP to US dollars, US dollars into euro, whatever that is, it's an easy trading platform to move, and it's something that's open on the more as a business platform, which has some pros and cons as well. But we also, but that's important to look that we're seeing these exchanges segueing from a retail focus over to a retail and business focus multi-asset platform. So they have multiple currencies and metals, so gold and silver and other things. So Uphold really offers a lot. Now, Uphold is not a trading platform. So if we look at like a Coinbase Pro, a Binance, even a BiTrue, where it's more of a trading platform, it's going to be different. And we're going to identify Uphold structured more like, let's call it more like bank, more like you're in a standard bank, as is Coinbase. You're in more of a banking type environment versus like an E-Trade. Your Binance, your BiTrue, your Coinbase Pro, and others have more of that look and feel of a traditional stock investing platform. It's different. So for the mainstream investor that's just coming into digital asset, they're already maybe a little skittish, even when it comes to working with an E-Trade platform and trying to invest stock. Trying to do that for crypto could be, a little scary for them. So we look at an Uphold, you look at a Coinbase, very, very simple, very easy. You get an idea of what the price point is. You can easily make your buys and your sells on an Uphold, on a Coinbase, and then even where did Kraken go? And even on a Kraken, you can easily come in, you can buy, you can sell. Now Kraken is also one of those that gets into more of the traditional stock market type of trading. And there's some features here that we also have to be very concerned with, especially someone that's coming in as a novice that's investing in this space, or someone that isn't necessarily in this at the point in their investing where they where they're not as maybe knowledgeable or yet researched or whatever it might be in the trading concept, utilizing margin. And we just had a great video last week. Nick and I did one. We talked a lot about margin trading and the impact that margins can have right now in the digital asset space. And basically, It's extending yourself. They're giving you a margin account, giving you money that you don't really have to invest. You're staking that money in order to get more gains, and it can backfire. And the other part is that we're also looking at the fact that some of these lending platforms are basically extending margin account to you, and this is where people are getting liquidated when they're borrowing money against their digital asset, which we've seen happen now in multiple instances, and something that we definitely have to be very concerned about. So let's dig in here a little bit more as we go through these platforms. So if we look at it from that, so from an investment perspective, we want to buy and sell digital asset. We want to do it easily. Again, we're talking about it from a U.S. perspective. If you're in Australia, if you're in Europe, if you're in South America, if you're in the Middle East, you're going to have different digital asset platforms available to you. So sorry, I pulled a muscle right here in my back when I was working out, and it's every time I move, it's driving me crazy. So it's one of those where the muscle kind of gets caught on your rib, and it's extremely it can be extremely painful. So, but all right, so let's go down and Uphold. I've used Uphold. I've used Coinbase. Years ago, in the beginning, I'd used Kraken a little bit, but it's really interesting. So let's look. I like how Uphold kind of explains. They do a nice overview of their Uphold, Coinbase, Revolut, and Robinhood. Robinhood, again, doesn't matter. You don't own, again, you don't own the digital asset. You cannot take the digital asset off of the Robinhood exchange. That doesn't mean you can't buy digital asset on Robinhood. That just means you don't own the key. You don't own the digital asset. You have a note of ownership, essentially, and Robinhood is going to be the permanent custodian of that digital asset. So if you want to sell it, you have to sell it on the Robinhood platform. Think of it as buying and selling stock at that point. There's no difference. You buy a stock, you buy a digital asset, you are not moving it off of their Robinhood platform. So that's something to take into consideration. Is it easy to do? Can it give mainstream people more access to a digital asset without having to register for something else and have it in more of a stock-like environment? Yes, they can. But again, you do not own the digital asset there. So one of their features, and you're going to see this, it's going to be a consistent message, in this trusted and transparent. I'm utilizing Uphold. Uphold has done a phenomenal job at really outlining things, and I think it's important for us to look at this and really talk about, the transparency. We need to talk about being secure and protected, and what does that really mean? Where does it go? How are they securing it? What kind of third-party custodial service are they using? How far is their reach? What types of things have they done to really make sure that they have a secure platform? What kind of partnerships do they have? Where are they located? And on and on and on. I think these are all important things when you're choosing a platform that we want to look at. Now, as we dig into it, what's interesting about Uphold, again, you have your personal investment and utilization from a retail perspective. Then they also have business transactions. So if you're going to be holding digital asset, you want to use Uphold Merchant Services. They have, a business platform that you have to register for. And it's also very interesting because you're able to move and accept digital asset and other currency. And so from a banking perspective, again, this is where it moves into that banking zone. Really, really important. So now, as we dig through this, let's so hang on a second. All right, there we go. So that's the business. Let me go back. Here's the App Center. These are basically their partners. We get into the apps. This is where you have when they loan, when you earn interest, Uphold isn't doing it on their own. This is also a differentiator with some of the other platforms where if you're earning with them. On Uphold, they brought partners in, and it defers a little bit of the risk away from Uphold, defers a little bit of the risk away from the person that's actually investing in, because it is another party that is specializing specifically in the earned interest, the SALT lending. So if you're going to take out a loan, and we need to talk a bit about that. And then it goes on and on and on with some of the other apps that they have. But let's look at Cred Earn. I should have pulled this one up as well. But here you go. Earn up to 10% interest when you loan Cred your digital asset. So here you're putting up your digital asset, and they're going to pay you a percentage. Now, they're paying you up to 10%. So you need to also ask yourself whether or not that earned interest is worth and justifies the risk of putting your digital asset on somebody else's platform and giving them full control over your digital asset for whatever period of time it is. In today's day and age, right now as we stand, is the exchange, and this is what each individual has to ask themselves in terms of their, how risk adverse they are. Again, not putting all your eggs into one basket. If you are going to leave a digital asset on an exchange, you may want to look at and consider breaking it up over multiple exchanges so that if there was ever an issue with one exchange, you don't lose everything. Now, one of the things that we talk about a lot is also utilizing the ledger. A lot of us use a ledger. That means taking it off of the exchanges and basically putting it offline into a cold storage type of environment. Now it's on your ledger. Your ledger is your key that is now going to give you access to all of your digital assets. You're holding the keys to it. You leave it on an exchange, they're controlling your keys to it, because your digital asset is pretty much stuck on their exchange at that point. If something happens with that exchange, you're at risk of losing the majority of your digital asset at that point, and that's scary. It's definitely a scary position to be in. However, if you defer that risk, now when you do put it on an exchange, we also want to look and say, okay, an Uphold, a Coinbase, those are U.S. based, and they've been in the market, as is Kraken, for an extended period of time, and they've established a legit platform, and you can do more research and due diligence on what kind of platform that is. Also to the point where they are providing a level of insurance and protection when we're talking about how they go about protecting your asset, how they're securing themselves, their audits, their encryption, third-party due diligence, standards, security. I mean, a lot of the things that we want to see. To me, my opinion, I still prefer and I like the concept of exchanges that are using third-party due diligence. I like the idea of exchanges that are using third-party cold storage that are backed up and recognizable in the world as a third-party cold storage. I like the concept of auditing and testing. I think that that's critical. They need to be audited. There needs to be some transparency in that. And as we go through, we see some very similar types of product across the platform. So again, here we get into Coinbase, secure storage, protected by insurance. And so let's take a look at this, because each one of them will dig in a little bit more in depth into what that really means. What does that mean, insurance? So I like this. If Coinbase were to suffer a breach of its online storage, the insurance policy would pay out to cover any customer funds lost as a result. I think that's key. Coinbase holds less than 2% of customer funds online, so the rest they put into the online storage. So that's really critical. I like that fact. I like how they really are focused on protecting the asset and what the what the insurance policy does. Now, obviously, now it says here this insurance policy does not cover any losses resulting from the compromise of your individual account. So if you're compromised on your own, if something happens on your end, their insurance doesn't cover it. If something happens on their end, the insurance does cover it. So again, your responsibility to use a strong password and main control of your login credentials at all times. So they're saying it's your responsibility. You take care of your keys. We'll take care of our keys. If our keys are breached, we have an insurance policy to cover you. So here we have, this is important, digital currency accounts and value balances on Coinbase are not subjected to FDIC protection. Now we are seeing that some of the accounts are using FDIC coverage of your US dollar account. So your US dollar account is protected. So if you have any dollars, and this is again this blurring of the lines between the digital asset exchange and the bank, because banks will also provide, in the US, will provide $250,000 of FDIC insurance on your US dollar account. Coinbase doing the same thing. Uphold is doing the same thing. FDIC insurance gives you the relative confidence that you can hold larger sums of fiat currency, of US dollars, on their exchange. Now, again, they're not providing that kind of coverage on your digital asset. So that's important, right? Cash balances held in your accounts belong to you and not to Coinbase. That's important, and we're going to see similar types of language across the platform. So when we get into and we look at, if we're looking at Kraken, we're going to see, very similar type of language. So if we get into security, what are they going to talk about when we really dig into it? How are they protecting our accounts? What type of security are they using? Are they using a third-party audit? This is all about security. But we get into it, we can dig in to let's see, proof of reserves. I think this is important. Kraken proof of reserves. Here's their audit process. So if we want to look and dig into their audit process, that'd be key. Kraken holds full reserves, and we employ an independent cryptographically verified audit in order to prove to third parties, including our customers, that customer funds are properly held. Again, utilizing a third-party audit to verify their funds. I think that's critical. They're responsible for a significant amount of funds. We definitely want to make sure that they're protecting it from that security process and perspective. So we can get into it. You can go and really go through it. Some of the audit shortcomings. I think that's important. This really gets into what that audit really means, and get into it. So, the point being is that we look at exchanges. We want to make sure that they're doing the right thing on our behalf. And here in a minute, we're going to migrate over and we're going to start talking about lending and borrowing. Before I do that, let me go back to the chat here. Sorry, I was neglecting you guys a little bit. I know you guys have good conversation going. But let me look here. So, and we're gonna start addressing this as we move over to the Celsius, to the Nexo part of this, which will really streamline, the different platforms that have borrowing and allowing you to put your digital asset to gain interest. But this is what Dieselhound had said. I know this goes back to like 15 minutes ago. Sorry, it took a little bit to get back to this comment, but Dieselhound, Nexo failed to post confirmed on-chain transactions. XRP took 8 hours to post to my Nexo account. They admitted and are willing to reverse 0.69 BTC worth. You lost 2.3 Bitcoin and 280K XRP. That is a huge amount, and definitely willing. Yeah, I mean, that's definitely something you have to address. You have to go after them about that. I mean, it's a significant amount of money. Again, if they fail to post confirmed on-chain transactions, that's their negligence. I believe that would be a case for an attorney to go and go after them for that, and file the right claim. It's going to come down to the amount of money's lost. Obviously, significant amount was lost there. That's something that you would have to address, as a legal matter with Nexo, especially if they're not giving you the response that you need. Now, again, when we look at it, you look at these exchanges, one of the key components here is where they're located. So if we're in the U.S., you want to make sure that you're utilizing a U.S.-based exchange. We want to make sure that it's a company that you can actually find, that it's not obscure in some way, shape, or form. We want to be able to find their local address. We want to find their local fixed business, and then approach it, from that perspective. I always find it interesting when it's difficult to find the company's information. To me, if you have a physical location, it should be plastered right on the website somewhere. You should be able to find the physical location relatively easily, and as you see here. But now again, Nexo, with their write-up, with those that have been observing. Here we go. This is one of the things I looked over this, but licensed and regulated financial institution. So this is key. What does that really mean? So this gets into exactly what you're talking about. So this really could be a good time to really look at what we're talking about here. But Dieselhound, you followed that up with Nexo cannot be trusted. Moved 15 million plus XRP to crack in many hours before liquidation started. So I don't know. I mean, that's insane. I mean, I'm looking here based on what they're adhering to. I mean, that's definitely a major case, and definitely there's an issue with what's going on there that goes above and beyond. Again, so here's my take on utilizing some of these exchanges, looking at, and we can get into a lot of this information here too. But these are crypto-backed loans. I think one of the most difficult issues that I have, and I guess this is a perfect time to segue into this, but one of the biggest issues that I have with these exchanges offering to lend money to allow you to borrow against your digital asset is the fact that they set these up almost like, and pretty much like, margin accounts, and those margins will be called and you will be liquidated when the volatility of the market kicks in and the price points of those holdings drop beyond what you borrowed against. So should they give you time to cure and bring those current? They should. If they're not, that's an impropriety. However, there's a large level of risk involved at this point, mainly because, and we discussed this the other night, Nick and I talked about this, the leverage of these margin accounts is weighted against you as the individual that's putting and staking your money in order to borrow against it, or staking your digital asset in order to borrow against it. So it puts you in a really high risk for these types of things to happen. So if, let's say, you're borrowing against Bitcoin and Bitcoin is stable, and you see a 0.5%, 1%, moves, it's not going to be, a massive movement. when you start seeing 10% drops, 6% drops on a daily basis, and then the next day it comes back up 10%, then goes down 15, 11%, I don't know, whatever the percentages are. We saw over days, we saw, big percentage drops. You're in a very volatile space where there's risk involved. So you have to really identify and assess your own risk. You have to identify and assess the company that you're doing it with. And Dieselhound brought up that Celsius did not liquidate customers the way Nexo did. Again, I think, looking at it from that perspective, no notification, no opportunity to cure the deficiency at that point in the variance between what was borrowed and now what needs to be brought to current. Without notification, they put you in a very, very bad spot. So I think that's difficult. Now we look at them, Nexo, Celsius, Uphold, as we had mentioned through Cred. I think I closed it by mistake. Coinbase is actually offering. Hang on, let me get back to regular Coinbase. I can't get back to regular Coinbase. Here we go. Hang on a second. Oh, I'm in help. Let me just do this. I don't know. I got into the help screen. All right. So when we're in regular Coinbase, they are offering mechanism to earn, but they're not offering a mechanism to borrow. So borrow is in, we have Nexo, we have Celsius. We haven't looked at BiTrue and Binance yet. So let's take a look at these two. So hang on one second. Before we look at that, Ferdy, Jeff, crypto loans got a very bad name a couple weeks ago because of the big spike down. People were supposed to do a margin trade, but because it spiked down, the notification if send were useless. Awesome point, Ferdy. That's pretty much spot on. When you have these major drops, they don't even have time to give you a notification. It's not like they're going to hold your margin account, but because of those drops, and that's a good point. However, even with a big drop, it should have automatically triggered notifications to go out. I know from a timing perspective, maybe it doesn't. And that goes back to, my statement of, giving someone an opportunity to cure that deficiency. It doesn't. And that's a great point. I should have addressed that early, before that drop, definitely. However, not getting the notification, there should be some mechanism in place. Sudden drops like that, because we know now. Here's the area where I see that there's responsibility on the side of the lender, knowing that it's a volatile market. Anyways, the market isn't always going up. It's not stable. Everybody getting the exchange knows it's not stable. The person staking their money and borrowing against it knows it's not a stable market. We know there's big fluctuations. We know since 2017, we saw a major ramp up, major ramp down, and it's been up and down rocky road since then. It was a rocky road before that. It was an amazing ride up, and then it's been a rocky road since. Major ups, major downs over periods of time. In that kind of environment, these lenders need to form some form of a due diligence. They're putting on an autopilot like it's a normal market, and it's not a normal market. Now, can you be stopped out and your margin called on stock trading? Of course it can. And people lose money in the stock market margin trading all the time because you're taking a level of risk. Do they owe you a certain due diligence if you're using margin to invest in risky stock? Not so much. Once your margin is called, that's it. You've got to fulfill or get liquidated. Now, on the other side, in these lending environments, it's a little bit different. Although it is a margin, they're selling this as a regular lending platform. So it's like a wolf in sheep's clothing. My opinion, it's a wolf in sheep's clothing that you don't understand from looking at how they present this that you are in a margin account type environment, because they make it look like I'm just borrowing against my crypto and I'm okay with it. I think it's somewhat misleading. It's somewhat false advertising because it is misleading. That's the major issue that I have. Better than a bank account is how Nexo is making their statement. Instant crypto credit line, earn interest. Your Nexo card, borrow at a 5.9% APR. Enjoy our lowest crypto credit line rates ever. Now, you put that out there from a marketing perspective. Those that are borrowing against are not anticipating being liquidated. There's nothing in here that says caution, buyer beware. This is a margin account. You're going to get liquidated. It doesn't say it anywhere. So don't sell your crypto. Don't lose the upside potential. Keep it and get an instant credit line from Nexo. Where does it say caution, buyer beware? Is it anywhere on their front page? Let's see. Let's scroll down. Business model, problems and solutions. Now, is it unique to Nexo? Probably not, because we're probably going to see the exact same thing occur on Coinbase. Now here, problem. Look, hang on. The problem and solution. They're saying the problem of how do you get beyond and take your loan out? Again, we're not in a stable environment. We're in a very unstable environment when it comes to digital asset. And to me, again, they're not addressing this instability. And they need to address the instability. It's not on the front page of their website. Again, I think extremely misleading. If you don't know exactly what you're doing, and if it's buried on the bottom page somewhere, that's misleading. What do we have here? Deposit crypto assets to your secure Nexo account. Great. Credit line become instantly available. Spend money instantly. No minimum. Okay. Where's the caution? Where's the cautionary tale that you can be liquidated? It's not here. On Celsius, earn, borrow, and pay on blockchain. Now, if I want to earn, I'm taking a level of risk by keeping my digital asset on their exchange. I put my digital asset on the exchange. I can earn my couple percent. But do I want to take that risk? Maybe, maybe not. If you have 10,000 XRP, if you have 5 Bitcoin, 1 Bitcoin, a half a Bitcoin, I don't know, you want to earn 10% interest on it, 5% interest, whatever it is, you have to determine for yourself if you want to take that risk. These networks have been around for a long time. They're not necessarily, I don't believe anyways, that they're not liquidating those that are staking their digital asset to gain, to leverage and earn interest off of it. This is that blurring of the lines between the exchange and banking. They're not yet banks. They're not verified as banks. They haven't gone through the full banking process yet. Not all of them. Some of them have. Like Coinbase is in, I believe Uphold is probably in that process. I don't know. But when we look at it from, and we had brought that up down here from a security perspective, and some of the things that they are working on. Now, it's interesting because they've segmented, Coinbase has segmented their platform between the Coinbase and the Coinbase Pro. You get into Coinbase Pro, and now you get into a full-blown exchange, stock exchange scenario platform where you have your margins, your calls, you can put trailing stops, you can use technical analysis. You do all these things within cryptocurrency on their platform. Is it a little premature for technical analysis? My opinion, yes. I believe most of these assets, there's nothing else tying to it except for buys and sells, and so the rest of it is just very suspect. You're using technical analysis to analyze what? The buy and sell trends. That's basically it, over periods of time. So now let's get into these other two because I haven't really talked about them yet. These are exchanges that are not U.S. entities, but they are available to U.S. Users. So number one, I put this up because it's important. You get into the exchanges, Binance US. The regular Binance had been pulled from the shelf essentially in the US market, and they opened up Binance US. Binance US is based out of the US now, so you could say that it's a US based entity owned by Binance, the master Binance. I put this up as soon as I logged in, as soon as I pulled up their website, I got this notice. Binance US services only residents in certain U.S. states. By proceeding, you represent a warrant that you are eligible for our terms. No product feature will be available to you until you have established your U.S. state of residence. So I can look and see available states, and then I can see, okay, these are the states that are not available. I like that right off the bat. So this handful of states right now is not available to use Binance. I think it's critical it's critical that they're putting it right up on the front page. That we have to look and say, okay, right on the home page of not the home page, but right as soon as we click which states, they immediately put those that aren't, so you don't have to dig around and look. Now we get into BiTrue, and when we get into Binance, let me just proceed. Here you can buy crypto. I don't believe there's a lending platform on the US one. You can stake. Let's see. Oh, look at that. They got a broken link. Nice. So, but we get into BiTrue, and here they have same thing. So you have your exchange. So you can log in and you can see your trading platform. Super easy to use. If you want to get into a stock price, you can put your trigger order. You can buy market. You can limit. You can do all the things you can on a traditional stock exchange. You can really look at and do different views and whatnot. You can look at the depth lines, K line. Then you can get into loans. Now, the one thing, again, we talk about loans. BiTrue Loan Introduction. BiTrue Loans is the digital currency lending service provided by the BiTrue Exchange. So remember we were talking about the lending being an entity that focuses on lending versus the exchange doing the lending. I don't know. I don't know what's right or wrong. I like the separation between an exchange and the lending partner. Creates a little bit of space in between. However, again, you still have the issues with the lending, and as with others, when the margin calls, you're going to be liquidated, and that's what happened on this exchange, as it did on Nexo, as it did on others. People did get liquidated. Now let's look at their Power Piggy. This is lockup BTR, which is their digital asset, and you can gain interest. You can do the same thing with Bitcoin, XRP, and VET. So I do like the idea of them borrowing. I like the idea of paid interest. I like the idea of paid interest on Coinbase. I like it on BiTrue. I like it on Binance if they offer it. You can stake at least. Coinbase you can stake and you can borrow and you can lend. I like the idea that Uphold is working with Cred. I like the idea that Celsius offers an earn. I like the idea that Nexo offers an earned interest. I don't use them. I have never done it. My digital assets are in hold mode. They're being hodled. They're being hodled offline. I do have some that are on different exchanges that are out there, diversified where those holdings are, as I've done with stock and everything else that I do. Diversified, different platforms. You never know what could happen. But I like the direction that all the exchanges are moving in order to pay interest on digital assets that are being. If you're going to leave digital asset on the exchange, you might as well gain interest off of it and make some money with it than it just sitting stagnant. But then you have to trust that as it is tied up, that you can also pull it out when you want to pull it out. So you have to look at that period of time on how they're doing that, and you can read through and assess. So let me spend the last 10 minutes here. Let's go through some more of these questions. Sorry again, I kind of went through all of that, but go back to, this is already about 30 minutes ago. James put up a comment, James Ryan. Jeff, I was with Nexo and fairly happy with them, but they are dragging their feet on offering interest on my XRP. Not good. So I went over to Celsius. I'm now getting 3.15% compounding interest. There you go. There's a perfect example. So we also have to learn from the community. It's hard to know whether or not one is working, one's not working. The fact that Nexo is not paying interest on the XRP that they're holding is a net negative. The fact that Celsius is good. And you're seeing repeat comments. So James, Dieselhound, both are using Celsius and like it. Ferdy was talking about eToro. Used to be like this, like Uphold, but you can transfer particular assets. Let's see. James Ryan says Celsius has custody insurance, just like Nexo. That's good. Using BitGo, and that's a good point. When you look at the third party custodian, BitGo is the largest in the industry. BitGo is really important when we get into the third party custodial service. Citizen XRP, also your first deposit into a brand new XRP wallet must be 20 XRP. Yep. Let's see. Whoops. Oh shoot. I might have just okay. Let's see. Nexo liquidated some of my XRP when the flash crash happened, but later reimbursed me because it wasn't my fault. I made a wire payment, which was held by their banking partner. It was their error. James, that's awesome. That's how it should be. They need to give you that opportunity and they have to do what's right. They really do. So I'm glad that got taken care of. And so Dieselhound, definitely you have an issue with them. Definitely recommend trying to take a different approach. Let's see. Is Kelly Slade, is BiTrue regulated by the U.S.? They're not really, none of the exchanges. BiTrue. BiTrue. They're operating in the U.S. I would still like. And that's a good point. I would still like, how when I came onto Binance, it popped that up, said it's not going to let me register from a state. I really wish BiTrue would pop that up as well. I think it would be real easy for them to track my location and put that identifier up there. I think there's a lot of things that need to be done yet on the BiTrue website. When we interviewed Curtis Wang, we brought a lot of this up, the changes to their website that we recommended to make it a little bit more transparent, certain things that were really, really important from a security perspective, to highlight what their security is, to highlight what a lot of that means. So I would really like for them to add more to the website about that. I think that's important. Let's see here. Let me go down. Toxic. If you YouTube it, on YouTube, if you search up Coinbase and set it to live, they are hacking channels. I don't know what that means. Let's see here. James, Jeff, all fine and well, keeping my crypto on a ledger, which I used to do, but I wish they'd allow staking so I can earn on my idle balance. Tezos can be staked right on the ledger. Interesting. That's really interesting. Just going through. Let's see. Ferdy, just as a final thought, if you already think crypto is tough, don't lend or borrow. That is a train station too far. That is a train station too far for you. Stay safe. Okay. Good point. Let's go down. Let me just go down. Just trying to pull some other comments out here before we go. Jerry Hall. There are many that need access to cash but do not want to sell digital asset because they are owning at a loss. And that's definitely a possibility. But elevating the risk to the next level is scary. From a business perspective, I'm just looking at these. This is Yo-Yo123. From a business perspective, I think it is smart for Nexo to not pay interest yet. I think Nexo do need to start paying dividends on Nexo tokens. Interesting. James Ryan, Nexo sent me an automated email when they liquidated part of my XRP after the fact. It's always good to have the after the fact. So the lesson here is, in my opinion, not financial advice whatsoever. In my opinion, it's too early to stake any form of digital asset, to borrow against it. The market's too volatile. We're seeing scenarios like this where people were liquidated with the big movements. Are these companies doing the right thing and giving people an opportunity, after the fact? Is that the right thing for them to do? Are they highlighting the high level of risk in the margin environment that you are borrowing against? It's nowhere on their website. There needs to be a cautionary tale, a cautionary statement on the main page. Don't make it look like glitz and glamour, that it's so easy, you can borrow, don't worry about your credit line, blah, 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 whatever, all these things. They need to be more transparent of this process because more people get liquidated, it sets a negative trend in the marketplace that isn't needed, isn't necessary. If they were more transparent in their process, and then also understanding the volatility would explain a period of time in case someone does get liquidated, that there's a certain period of time to cure, and it's more that part of the process is more transparent. So that's my thought. Those are my comments. This is Jeff with the HODL Review. Really appreciate you guys taking your early Saturday morning to spend it here with me on the chain. With the HODL Review. Tomorrow night we are rolling out a brand new show segment. So make sure you guys tune in at 8 p.m. on the roundtable. 8 p.m. we're going to have an exciting show. We're going to be rolling out a brand new show. We're excited about it. I believe you guys are going to be excited about it. I know the host of the show is excited about it. We've got a brand new open for the show with some music that was made for us by someone in the community that many of you guys already know. So with that, I'll look forward to seeing you guys tomorrow night at 8 p.m. And I hope you guys have an amazing day today, even though we might all just be in the house. I don't know. Go out to the grocery store and get outside. That's all I can say. Until then, we'll see you tomorrow night.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.